morning. It's the 12th of December. We just had the Fed meeting that went through about 24 hours back. I waited to make the video post the FOMC meeting, basically to see how the market reacts. A few things about the Fed meeting and what we want to talk about today also is how the market has reacted to Oracle's earnings, as well as what do I see going forward in 2026. Now, again, these videos will come out abruptly whenever I hunch about something that's going on in the market or something that's happening in the economy, which could be of material consequence 6 months, 12 months, or even in the next 6 weeks. That's when I'll usually go ahead and make these videos. So don't go out expecting a video every week or every 3 days or something like that. That being said, let's go on the Fed meeting. One of the things that the Fed meeting made clear was that Powell has his term all the way up till June 2026. He has about 3 meetings before that. And in the last part, when he was asked this question saying, what do you want to see when you leave this job? And what are you going to basically do after that? Obviously, the do part, he said there's a lot of time for me to decide what to do. On the flip side, one of the things that he did say was that he wants to leave the economy in a great shape / good shape for the incoming Fed governor. Now, that means stocks, crypto, everything is on risk on board. What it means is that he is going to do whatever it is in his power in order to maintain liquidity, which we're going to talk about. Two, maintain stock prices, which he cannot control, but his wordings, his speeches, as well as the incoming Fed governor speeches will start speaking about more and more rate cuts, even though not a lot of them are priced in. And what he's also saying is the fact that when the new Fed governor comes in, he doesn't want it to be that, oh, the economy is getting into shambles or is already in one, and now we need to do something about it. So, coming to the liquidity side, the Fed, as of today on Friday, 12th December, is going to be buying $40 billion worth of treasuries. Now, what do I mean by that? Basically, as the central bank of the world, possibly the Fed or of America itself, is going to pump in $40 billion worth of new currency that enters into the economy. Now, what does that money do? It basically goes to banks because the Fed buys from the banks, treasuries, and the banks now have more liquidity in order to lend to more and more people. That creates a productivity boom / spending boom in economies. Now, by that per se, it could be said that the fact that the Fed is doing this means that they're seeing something that we're not seeing. But because of the one thing that he does truly believe in is that he wants to leave his legacy behind, that he was able to do better than most. And two, he's able to give the economy into the hands of the next Fed governor in a situation that he would have liked to take it from someone. So, all in all, liquidity is being pumped into the market from the Fed. The Fed is getting dovish in its statements. He could have very well have said that the unemployment rate has picked up considerably, and hence forget about rate cuts for a while, because at the same time as I do believe unemployment's lower, inflation's sticky. But he did come out and say that tariffs will have a one-time issue. Maybe Q1 we'll see the inflation numbers topping out and then coming in lower. My base case in all of this is that the Fed is supportive of equity markets. The Fed is supportive of liquidity. So you should be seeing stock markets, at least in the next 3 to 6 months, head higher, barring any exogenous shock that you do end up seeing. But that is my base case, that you will see some form of a rally. I don't know if it's going to be parabolic or crazy, but you will see stock prices most likely go higher. Certain stocks, high beta stocks, can do a lot better. At the same time, keep in mind that you will have some pockets where if you don't perform, this is a market that's currently reached a place where if you're not beating by a wide margin, your stock will get cratered. It can be down 20 to 25%, and you might be holding a few stocks that are down 25% and not beating the index, because remember, the index is getting very, very concentrated. There are few stocks taking it up. So it's not like if you're not part of all of them, you're not going to do that well. Like, I'll give you an example. In the past a month and a half, everyone that's been a buyer in Nvidia, Palantir, any of these big flyers since October, even Robinhood and all of these guys, they've not made money. Now, the index has gone back to its new high, but some of these stocks have not made money. Yes, Google has made money, so Google's the only one that's technically made money. Meta's down almost 20%, if not more. Netflix is down almost 30%, if not more. So keep in mind that these are some things that can play out in your portfolios, but more or less you should be expecting the market to drift higher in the next 3 to 6 months. There's another thing which a lot of people don't speak about, which is the one big beautiful bill that Trump did sign. And why am I talking about it right now? Is because what it does is that the day that it got signed, it retroactively has provided tax refunds for the year of 2025 to American citizens in the first quarter, that is January, February, March, maybe April of 2026. So, what do I mean by that? If you are being paid, when you did pay a tax on tips over time and all the other stuff that was there in the beautiful bill that you're now going to get a refund on, that money is going to come into your bank account in the next 3 months or in the next 4 months. What do Americans do when they get a higher refund check? So, if you were expecting maybe a $2,500 refund check, you might get a $3,000 or a $3,500 refund check. When Americans get $1,000 in refund check, they spend that, and maybe they spend 1,500. But that's how the American consumer is. So remember, you will get a lot more spending in the first 4 to 6 months of the year. That is what I foresee as the market doing. It does look like that is going to be the case. You might even see an 8,000 S&P 500 in the next 6 months. It's not too much, 15%. It could have a rally, or you could see 7-8%, and then it comes back lower. Now, one of the good parts of a healthy bull market is the fact that some stocks which were going crazy, somehow they seem to have an issue and they actually start cratering lower. The example that I'm going to give you is Oracle, right? Oracle was close to hitting $1 trillion in market cap, or maybe it did, but you did see the stock go all the way up from somewhere around. Let's actually go see it. So if you look at Oracle, it's trading at about 198, down again another percent. It was down about 10% during market hours. Now, if you go and see this chart, you can see it used to trade at somewhere around 345. 345 went all the way down to 198. That is not a small fall. If you go down and look at this, it had a scenario on 9th September where it rallied in a single day 44%. 44%. That is a few years of income, not a single day. 44% in a single day. Now, this was irrational exuberance. This is what you don't want to see in possibly bull market tops or fag end of a bull market. But one thing that is clear is most stocks have retraced higher after this. Oracle is down about 42%. And what has this done to the S&P? The S&P is close to hitting an all-time high. What has this done to the triple Qs, which is the Nasdaq? We're about 1.8% away from an all-time high. The Dow, on the other hand, is a new high altogether. Now remember this, I'm not sure how many of you will remember this, but keep in mind, if you have a few indexes in a particular country, like in America, we have the triple Qs, which is the Nasdaq, you have the S&P 500, you have the Dow Jones. It's very rare that in a bull market, if one index makes a new high, the other 2 or 3 indexes do not go on to make new highs. It's very rare that you see that divergence. You did see that divergence in the Dow Jones earlier, but now you're seeing the Dow picking up. Why are you seeing the Dow picking up? Because there is some form of air being taken out of this AI bubble, which we were speaking in our last video, and is moving into some form of stocks which are going to be beneficiaries of AI that do not take up capex of AI. By that, what do I mean? Companies that are not spending on building data centers, on building LLMs, but are using AI in their business models to make more money, better margins for their business. So you might see software stocks actually do pretty well, which have been pretty bad. Look at something like a Microsoft, right? It is down. It is down pretty badly. It's almost, this is not something you expect when the Nasdaq and the S&P are about 1% away from an all-time high. You were down almost 15% from the high, maybe 16%. Keep in mind, what I'm trying to tell you is that it is looking likely that you will see a very nice rally, maybe into the 7,500, 2,600, 2,700s in the next 6 months. It's quite possible that you can drift higher this way, all the way higher, right? Until May, June, when the Fed chair leaves. Now, one thing that I do want to come back to is this concept that why do I believe that we might have some form of a flush in the second half of the year? Now, this is the interesting part of the video that I wanted to talk to you guys about. The first part of the video was about most likely we should see the next 3 to 6 months, at least 6, minimum 3 of a bull market continuing. When that happens, you will see your stock prices go higher, you will see your stock portfolios go higher. Remember, it is very important that you be prudent when others are being irrational with their. So, how you conduct your affairs is with prudence when others are conducting it irrationally. And when others are conducting it with prudence, you should be out there going in and buying all the stocks that are available. Now, what I'm coming back to saying is the fact that the first 6 months of the year, I do expect the market to start rallying. You will see some form of a rally in stocks. my view. But up when you get into the June phase, when you have the new Fed chair, when you have the replacement, which might be Kevin Walsh or Kevin Hassett for the Fed chair, I believe the bond vigilantes that are out there, they would turn around and not be supportive of a Fed chair that is out there looking for larger than 25 basis point cuts. Now, who knows 6 months from now whether the market requires it or doesn't require it. But remember, the bond market is what made Donald Trump cave in when it came to the tariff rates, right? It's the same story that could possibly happen. I'm not saying you're going to see a tariff kind of fall, but if you see a 7-8% rally, you necessarily can, in the first 6 months, you can see the 7-8% rally being taken away in a month. It doesn't take too long. We lost about 5% in less than, I think we lost 5% in October. From October to the S&P was down maybe about 3.5. That was from 29th of October till 21st of November. You were down about 9%, close to 8.75% for the Nasdaq. So it doesn't take too long to take away all of this. And remember, this rally began all the way from September. So September all the way up to November end. Now, this is something that I keep in mind at all points of time, is to realize that my base case, you see a rally up front in the first 3 to 4 months. You then see it topping out possibly when the new Fed chair comes in. You are also most likely going to be seeing the House being taken by the Democrats in the midterm elections. Possibility of that happening, which means Trump can't pass his laws very easily. There is maybe a gridlock in the government in America. What does that lead to? Two things. In the near term, when that happens, which is July to November, when the November midterm elections happen, you possibly will see the market come lower and maybe stay there, awaiting to see the certainty of the elections. Now, here's the fun fact. When that happens, I want you guys to be making sure that in the first 3 to 6 months, when you have taken some profits out from your gains, you can then put that money into that in the period between July to November. Because during midterm elections, the quarter in which the midterm election happens, which is November of next year, and 2 quarters post that, historically, for the past 60, 70 years, have been the most bullish quarters in the history of a 4-year presidential cycle. Now, I'm going to repeat that again. In November of next year, now just to come to the meat of the story, in November of next year, up until March of 2027, you will see, possibly, if history repeats itself like it usually does in these situations, you will see a very large rally. Now, in order to make use of that, you need to have money in order to buy in when things get cheap next year before November. So, one of the things I've always realized is that you need to prepare for next year, and it might not happen the way you expect it. And maybe we get a fall in coming, right? But the art of forecasting and the art of thinking as to how things happen, and if they do happen that way, then you need to be prepared and act accordingly. That is the concept of forecasting. Is it a dead project of forecasting because you don't know what's going to happen? Absolutely. It may or may not happen. But the question is, if it does, how do you react? You only react if you've already thought about it in a particular way, that if this happens, this is how I will do it. So think of it that way. This video was more towards this concept of me trying to share my 2026 and beyond viewpoints, which is purely related to the fact that the first 3 to 6 months, you should see a rally come through. Possibly in the end, you will see a fall that comes in. And then towards the end, which is in November, you will then start seeing a rally again, because historically that's been the best quarters that has worked out. So anyways, enjoy your Christmas holidays and New Year's. If there is a shit storm that happens in the markets, you will see me making a video. And I hope to do one around Christmas. So enjoy yourselves, have fun, take care. Thank you so much.